I am really excited. I found out about new programs and services to help cut down on the amount of down payment that you put down and also on the amount of monthly payments that you put down. There's a variety of programs out there. Some are offered by the states, and different states have different rules as far as how to go about doing this. I did have a first-time homebuyer program video, which is up already on Real Estate and Recreation, which is my YouTube channel that you can go and check out. However, these are two additional programs that I'd like to introduce to you separate from the government that you might want to look into. And it's not only for first-time home buyers, it's also for people who want to buy a second home, a vacation home. They also have a program out there where you can use the money to buy an apartment building. And I thought it was really, really great. I'm really interested in it. So one of the companies, their name is called Unison, U-N-I-S-O-N. It's available right now only in 23 states. But if you are in a state where you would like to buy a home or an apartment building and they don't service you, just go onto their account, go into their website, and then you want to click on your state to vote on your state. The more votes that they have for that state, the more they are able to go to the government and to approach lenders to say, hey, we are interested in opening shop up in that particular state. Well, let me just tell you how Unison works. This is how it works. It is a partnership program. So let's say, as we all know, many banks require you to have 20% down in order to buy a home. Some of you don't have 20%. So you may look at FHA. But FHA says you have to put down 3.5%, which is cool, and you go ahead and do that. But then you have to pay something called PMI, Private Mortgage Insurance. Now, back in the day, private mortgage insurance was only 1% of the loan that you were borrowing. Well, today I come to find out, after speaking to my bank, they know it's only 1% for those people who are have extremely good credit, like in the 800s. If you're in the lower 700s, then they'll start to charge you 2% more. Well, Unison is one company that is changing the game on that. What they do is they partner with you to buy the home so that you don't pay PMI at all. They wipe PMI completely out. So that means that your monthly mortgage payment will be lower. That also means that you can buy a more expensive home. If you're interested, you can actually buy in the neighborhood that you want instead of settling in a neighborhood that you're not interested in. There are no income restrictions and there are no neighborhood restrictions, meaning if you look at most first-time home buyer programs or most programs where they're giving you money for down payment, they want you to buy in certain targeted neighborhoods. With Unison, you don't have to do all of that. They will partner with you no matter what neighborhood you choose, no matter what your income is. So I think that that is a great program for that. Now, you are not taxed on that income, or sorry, not that income. You're not taxed on the amount of money that they give you to help you purchase the house. There's no monthly interest payment that you have to pay them. The way it works is if you refinance, sell, or live in the home for 30 years, it's at that point that you pay them back the money. And what they do is they take a percentage out of your home, as well, the difference between what the value of what your home is worth and what it was worth when you first bought the home. They take a percentage of that, which is normally 17 to 35%. And they keep that from themselves, and then you keep the rest of the money. So what I did is I did the math on that, and I'm going to see if there's a way in which I can demonstrate to you the savings. Let's see. All right, this camera will not let me switch it around. But what I did was I did a comparison, and I said, well, are you really saving money going into partnership with this company as opposed to going it the regular route, doing PMI? And what I found out with the math is I put the PMI at 1%, even though, as you know, it could be much higher. It could go up to 5%. And I used today's mortgage rate, which I checked, and it was at 4.7. And I saw that you would be making an extra $200 every month for the next 30 years with the regular PMI if you put down less than 20% of the loan amount that you need. Then I looked at Unison, and I saw that there was a significant savings at the end. First of all, you're not even paying PMI, so your PMI would be 0. Second of all, when I added up every year, I took a home that cost $100,000, and I said, all right, the PMI is going to be $200 a month if it's 1%. In 30 years, that's going to add up to $72,000. With Unison, you don't pay any PMI. The mortgage rate will be the same. And at the end, let's say you sell that house, you're only going to be selling it back on a $100,000 house. You're only going to give them $17,000 back as opposed to $72,000. So I think that's a significant difference. And I think you will save a whole lot more money doing it that way through them as opposed to doing it the regular way through the bank. Now, there is another company that I want to introduce to the fold, and it's called Own Home Finance. Now, this company is relatively new. They just started in 2016. Unison has been around since 2004. Their model is a little different than Unison. Their model is that they are a loan. They don't go into partnership with you. However, they charge 25% interest. It seems as though that's a flat fee on your property. So you still, that's $25,000. You're still paying less than the $72,000 you would be paying if you went with the bank and you had to pay for private mortgage insurance. On top of that, they have an IRA program where they match you for all the money that you save. Let's say because you don't have to pay PMI, you have extra income and you can put it in a special savings account that they have. They match you 50% of whatever you put in. So you are gaining money with Own Home Finance as well as saving money with them. Now, there is also a home equity program with Unison. The maximum that they will give you is $500,000. They will not give you more than that. So let me just lay that out there so that you know. But basically, it does vary depending on how much does your home cost. They send an appraiser to your home. Now, under the home equity program, you will have to pay for the appraiser and any administrative fees, which would be 3.9%. Let me just go back to that. Yeah, it's 3.9%. And they don't care where you use the money. As long as you are living in one of the states that they support, they will loan you the money. But you can use that money and purchase a second home or a vacation home, or use it as a down payment to an apartment building in a state that they don't cover. Or you could even take that money out the country and buy yourself a vacation home or a second home. Or if you're not even into real estate at all, you just needed to pay medical bills, whatever it is. When it's with the home equity program, you have a whole lot more freedom as far as where you want to purchase the property. There are some extra conditions that you do need to know. With these programs, they prefer that you do have a good credit score of 620 or more. They do require that you are going to live on the property for 3 years or more. When it's the home buyer program, they want the property that you are going to buy for that to be your primary residence. If it's the home equity program, that second home or that vacation home, like I said, there's no requirement on it, but they do require that you live in your primary residence like 180 days out of the year. So I'm thinking to myself, if you're in the military, this might not necessarily be a good option for you, but for everybody else, I think that this is definitely a good deal. Going back to home buyers, the home buyer program, they don't want the property that you buy to be a flip. They want the property that you buy to be a home that you are able to live in immediately. It's okay if there's some rehab costs, but it has to be livable. And you have to occupy the property. In the home buyer program, it can be a multi-family home. It does not have to be a single family home, but you just have to live somewhere in that house. Whether you live in the basement, you live in the attic, you have to occupy one area of that house somewhere. Now, you have the option of buying them out after 3 years. When you do that, there is a termination fee that they do require that you pay. Iris asks, do they require you to have earned income if you are a retiree? I believe in the second program, the owner, the last program that I mentioned, I believe that they require some sort of income, the own home finance program. But the other program, no, because the way Unison works is they let the bank, when it comes to home buying, they let the bank qualify you. They don't do the qualification. They let the bank qualify you. But with the own home finance program, because that is a loan, they probably will be looking at your income. I have reached out to them. I have not heard back from them regarding a couple of questions that I've had, but I will be leaving the link with the information at the end of the video so that you can check up and see for yourself. I just want to also say hi to Stacy Adams and to David Cradle and to Derek Clark, who have joined the video. All right, let me go back. Now, when it's the home equity program, they are going to send an inspector. That's the only time they send an inspector, is if you're in the home equity program. If you're in the home buyer program, they don't do that because the bank is already sending an inspector to you. So I just want to give you a heads up and let you know that. Now, here are the risks that you need to know. If they see that you are missing payments, they may foreclose on you so that they don't lose out on their money. So if you are having problems later on down the road making payments, you should let them know. Once you let them know, they will issue you out money to help you make those monthly payments. Now, that you have to pay back within a certain amount of time. That they're not going to wait the 30 years for. If you don't pay taxes, they're going to reach out to you, but it's best if you reach out to them. They will help you pay your taxes if you come up short. If you don't say anything at all and you try to act like there's nothing going on, they will foreclose on you so that they can protect their investment. Because what they've done is they put a lien on your property so that you cannot move without their approval, so to speak, because they want to make money on that income. Now, I asked them, what if you are an individual and you don't want to buy a home, but you want to help other people buy a home? They said they don't work with individuals. They only work with pension funds and university endowments. So those of you who are still working, if you get in good with your human resources benefits director or the CFO of your firm, you might want to speak to them about having part of your pension fund invested in these companies. Both companies use pension funds to fund those who are looking for homes. And if you look at your pension fund is probably not paying 17 to 35% interest as far as what you already receive right now. So it might be a good idea, a good selling point to bring to their attention. The other thing that they would like is, if you are a realtor or you know somebody who is a realtor, they are looking for realtors to help them spread the word about their program. And they're also looking to work in conjunction with realtors to let any prospective home buyers know that, hey, this program is here and we can help you buy a home that you probably normally wouldn't be able to afford, as long as you are able to just make those monthly payments and pay the taxes. Then we can assist you. So you may want to spread the word there. They're also looking for lenders. You may want to spread the word to any lenders out there that you normally work with that are not familiar with their program. They are willing to work with lenders that are not on their list. If you go on their site, they have their own list of lenders in each state that they typically work with. But they are willing to work with those who are not familiar with the program, just so you know, just a quick FYI. Let me go back to risk and tell you other things that you should be aware of. If you want to add or remove anyone from the deed, there's a small administrative fee to do that. So, for example, if you get divorced, or if you have a child and you want to add the child and subtract the husband or the wife, there's a small administrative fee to make that adjustment. There's also an early termination fee. I think I mentioned this earlier, if you want to buy them out. And then lastly, the thing that I thought was really nice about these programs that I like is, let's say you have the home and you are under contract with them as a partnership, or with the other company as a loan. Let's say you add another room onto your home. And let's say that room brings up the value of your home. And then at the end of 30 years, your home, instead of being worth $500,000 like everybody else, your home is now worth $600,000. Both programs will not take 17 to 35% off of the $600,000. They take 17 to 35% off of the $500,000. So because that extra room was not there when you purchased the home, even though it drove up the value of your home $100,000 more, they do not take credit for that. All you have to do is take a picture of the home before you bought it, a picture of the home after, and then fill out a form saying this is how much I paid for the room. And then at the end, after the 30 years, or after you decide to sell it or refinance, they look at your home again and they will not count that extra room. So they're actually, in a sense, in that case, taking less than 17 to 35%. So I think that these are great programs that you may want to consider buying a home. Again, after the video is finished, I will be providing the links to both of them so that you can do your own comparison. Please also note, I will also provide the links to states that now offer similar programs as well. Unfortunately, I could only find like 4 states that do this. I've been told that there are 30 different programs, but these are the only programs that I was able to find. And I wish you guys luck. Enjoy the rest of your evening, and give me some feedback at the end and let me know what other questions you have, what answers you may have found that I did not cover, and basically how things worked out for you if you decide to go ahead with these programs. But I think it's great that they help eliminate PMI. They help lower the cost of your monthly payments, and the money is not taxable that they give to you, and that you're also able to buy more of a home in an area that you want, as opposed to settling for something that you may not necessarily be interested in. So bye for now. I hope that helps, and have a beautiful evening. Bye.